Started. The record has been hit. Well, good morning, everyone, and welcome to another awesome monthly webinar. And today we're going to talk about business numbers. And I tried to keep this as vague as possible. What does business numbers actually mean? Is it, the number of my business? Is it the number of sales? What is business numbers? And today I'm really going to answer that for you because it's not just a number, it's a multitude of numbers in different areas based on different things. And this is very important. Now, guys, if you're new to the Black Belt Business webinars, I do have a very strict warning. This webinar is designed to help you understand your business numbers. We take full responsibility for the positive changes to your business after implementation of these ideas. And guys, one thing I'm really adamant about is it's no good being a webinar or a seminar junkie if you don't do anything with what you learn. And my aim for today is for you to get at least one awesome idea out of this webinar and you go and implement it. That will be huge. So guys, let's get into it and welcome. I've already gone through the welcomes, guys. If you've got your coffee there, great. If you're going to be doing Facebook while you're listening to this, yeah, not so great. There's going to be some really interesting points today. So if I can get your focus just for the next, say, 40 to 45 minutes, I'll be very happy, and you will get the most out of the webinar. There's quite a lot of people already on the line, guys, and it's growing every minute. So let's get the Facebooks off. Let's just turn the emails off. Let's just have a good focus and watch what you'll get out of this, guys. I'm pretty sure it's going to be powerful for you. So next part, if you're new to the GoToWebinar control panel, if you want to minimize the sidebar, there's an orange button up the top. If you want to raise your hands, it's roughly in this area around here. And if you want to type your questions in there and pretty much just hit the enter key. That will get them out. So, guys, what is business numbers? And this is the topic of the day. And it's really interesting when I do this subject or I talk to clients about this, and it's one of the first things that I do in their business. I find out what their business numbers are, because reality is with numbers, you can improve numbers, you can decrease numbers, you can change numbers. It's really important to understand what your business numbers are in the business. And I'm going to ask you a couple of questions throughout today to really get an understanding if you really understand your numbers and what they are and how they are. And I will stress, if you guys, I know there's a couple of accountants on the lines already. I know there's some bookkeepers on the line. I'm not here to replace your job. I'm here to make your job easier, because if your customers and your clients understand what they want from you guys in terms of numbers, then you're able to easily provide it to them. So, guys, I'm really looking forward to sharing, I guess, the top 10 numbers of business at the moment that I believe all business owners need to have a hold of. But there are so many more, and I'm going to take you through a list of heaps and heaps of them afterwards to really understand where your business is at. So just a tiny bit about myself. I'm the guy on the ground squealing. No, actually, I'm the bald-headed guy here. I don't know if you can notice, my knee is jammed up against one of my students' pressure point right underneath the ear and the lower chin there. He's not in too much pain, I promise you. It only took him about 6 months of rehab to get over it. But guys, at the end of the day, I'm Nathan McDonald. I'm multiple business owner. I run multiple businesses. I have a great school up here in southeast Queensland of about 120 students, which is growing every single day. I need to curb my marketing, which is pretty sad, but I do have waiting lists now for some of the kids' classes. And reality is, I just help clients be their accountability partner, making sure they implement their business numbers correctly, chase them up on the figures, and really give them that motivation that those numbers can really change. And they're my passions, guys: martial arts, helping out clients, and loving golf at the moment as well. So really enjoying that. So guys, that's a bit about me. Guys, expectations for today. A lot of interaction. Please interact. If you got a question, whack it down on the side. I will keep checking the questions every single slide that I go through. Write plenty of notes, guys. I know those people Facebooking. I can see you now already Facebooking. Stop it. Write plenty of notes and ask plenty of questions. Guys, this is for you. This isn't about me. I understand my business numbers in my business. I track them every single day. This is for you. So, guys, get the most out of this. So, here's our first bit of interaction. What would you like out of today? To ensure that you guys help me get the most out of it, go whack in the questions what you would actually like out of today. I'd love to hear from you guys. What is it that you would love out of today's session? What would you like to find out? Great. Checklist of numbers, I'm assuming that you actually would like. New ideas and education, absolutely. Surprise me. Oh, no, you don't want to be surprised, Janet, trust me. Not from me, anyway. Refresh a course, absolutely. We know a lot of this stuff that we're actually going to go through today. The problem is we more than likely don't implement it, and that's probably the biggest challenge. A better understanding, absolutely. Go on, guys. Let's get some interaction here. What else would you like out of today? Most important number of profit and loss report. Yay, interesting and funny that we will actually go through that. And you'll probably freak out a tiny bit, but most people look at the profit, but that is not our key number in our business. Excellent, Lynn. New to business, here to learn. Absolutely. Let's get a whole heap into that. So, guys, I have 3 outcomes for today that I would like to actually take you through. The first one is importance of knowing your numbers. I'm just going to quickly take you through some mindset stuff about why it's important to know your numbers. That won't take too long. Then I've picked 10 numbers for your business. Now, it was funny. When I'm building this webinar, I'm sitting there going, 10? How can I limit this to 10? There are so many different numbers out there that each individual business needs to be tracking. Some are relevant, some are not relevant for your particular business, but what I tried to do is get the 10 most important for most businesses out there. And then the last bit, which is probably the most important, how to implement and make decisions on those business numbers. So I'd love you to be able to stay to the end of the webinar, everyone. Very, very important, because I'm going to take you through how to implement and make decisions. And I've got a really good example of a decision that actually made a particular customer, by understanding their numbers, literally over $50,000 in the first couple of months, just by looking at their numbers that they never did before, and it just changed their business straight up. Couple of others, turnover required, and the other thing is percentage of expenses to watch out for, and we'll go through some of those. So, guys, they're the 3 things I want to take you through. So let's get stuck into it. Let's look at section 1, the importance of business numbers. Now, quite simply, guys, and everything out there has numbers. You've heard the world runs on numbers. We run on money. Guess what? Money is based on numbers. You don't sit there and go, oh, here is an average dollar. I want to buy that average for that average price. It doesn't work like that. You have exact numbers. When you go to the doctors, you have a whole heap of numbers to actually work out if you're healthy or not. You've got everything from pulse rate. You've got everything from your cholesterol rating, blood pressure, blood sugar levels. Your vision is even rated on numbers. For those who have got 20/20 vision out there, awesome, guys, well done. Your measurements such as waist and hips and height and, your temperature. Everything is based on numbers, and the doctor can see from those numbers whether they're good or bad. And immediately they know what to do to actually change it. And this is the importance of business. We need to actually understand what our numbers are to find out if our business is healthy or not. And then if it's not healthy, what do we need to do to actually change that? And this is very, very important to understand. This is a checkup for your business. Now, it's really funny. How often do most people go to get checkups at doctors? Well, if you're like me, I'm a sort of like once every 5 years type of guy, and that's probably way too long. Some people it's once a month, depending on what's actually happening with your body. The problem with business is normally if we're waiting a year or 2 years to go and check our numbers, it's normally too late. it's normally too late to go and fix that information, or be able to fix the business. And the best comment or the best question I've ever been asked, I walked into a prospect, and this is when CleanMade went out of business. I don't know if you guys remember when CleanMade went out of business, but it was actually on that day, massive news reports and all of that. And the guy sat there and asked me, he goes, right, could you, if you're that good of a business person, could you have fixed CleanMade? If you walked into CleanMade today, could you have fixed it? And I bluntly said no. Why? Because the challenges didn't happen just then. The challenges happened 18 months ago. They didn't look at their numbers. They weren't monitoring their numbers correctly 18 months ago to then make the decision so they could be here in 18 months' time. And this is the thing you've got to look at. You can't just sit there and all of a sudden, when things get desperate, start looking at your numbers. It's just like the webinar that I did on emergency marketing. Oh my goodness, I don't have any sales this month. I better run around and put some marketing in place and expect it to work, and then get really disappointed it's not going to work for you, because marketing's a 3 to 6 month investment. Now, there's marketing out there that you can do really quickly if you've got a lot of money to throw at it that can actually boost your sales almost instantaneously. But as small businesses, we don't have a lot of money to go and throw at marketing. So reality is, understanding your business numbers on a daily, weekly, fortnightly, monthly basis is so important. It is a checkup of exactly where you're at and what you're looking at in business. And that I really want you to understand that, guys. This is a checkup for your business. And what is the definition of your business numbers? I keep it very vague, as I mentioned before, on what I'm talking about regarding business numbers. Well, let's put it this way. What could it be? Well, business numbers can be your KPIs, key performance indicators. They could be performance measures. They could be benchmarks, profit and loss statements, balance sheets, sales targets, budgets, bank accounts, return on investments. How many more business numbers could you actually be tracking? There are so much more. And reality is, you guys need to find the most important numbers for your business that you need to be tracking. And today I'm going to actually share those with you and what I believe they are. But really, business numbers, when I define business numbers, I believe it's anything to show you where you're at and anything that you can improve on, or put decisions in place to actually improve and move on, and really grow your business, or increase sales, or increase where your business is at. And that's what business numbers, if I look at the definition of business numbers, it is purely any number in your business that is there that's going to help you improve and grow and make decisions on for the future. And this is so important, guys. So let's go and have a look. Who here, and I just give me a show of hands if you don't mind. Let me just open up the attendees. Who here actually monitors their business numbers on a regular basis? And please put your hand up. Again, it could be sales targets, it could be KPIs, reading your financial reports. Who here actually does that on a regular basis? Now, if half of my, well, actually more than half, if my clients don't put their hands up, we're going to have a good discussion in our next session. Thank you very much, guys. Very important. Okay, great. So everyone does check some form of their business numbers regularly. And guys, this is very, very important to understand. And for those who don't put their hand up, hopefully that checkup slide really enforces the point of actually doing it. And the thing is what normally stops people from doing it? And don't answer this question, guys, because we can be here forever. But I want you to write it down yourself. What is stopping you from really knowing what your true business numbers are and checking them on a regular basis if you're not doing it? And look, I boil it down to a few things. Whenever I talk to people about their business numbers, I normally find out the main reasons they don't do it. And they have things like, they don't have the knowledge. I don't know what I'm looking at. I don't know what to read. And it's really funny. I go into most companies and I go, right, have you set your budget up? And they go, yeah, my accountant told me to put a budget in place, and I put it in place, but I've never looked at it since I've put it in place. I don't know if that's very familiar with you guys, because reality is you don't have the knowledge to actually implement it. You're not being told on how to run a budget correctly. And these are the stuff that's actually stopping you. Also, understanding the importance of your numbers. Business is just a numbers game. Let's face reality, and you guys hear this from me every single time. Business is purely cash, and that's all it is. You're in business to make money. That will then enable you to free up some time, which will enable to get you to a lifestyle. So reality is, we're looking at cash. What is cash? A number. It is a business number. So you've really got to have a look at the importance and not realizing the importance of checking your numbers. Another point is we normally don't like to see what our numbers really look like because it would actually be scared. You'd be like this guy sitting there going, "Oh my goodness." Denial is also a wonderful comfort, a wonderful comfort spot. How about we call that? But reality is, it is scary sometimes to look at some of the numbers, especially when you're running out of cash. You don't know where the next customer's coming in. It's very important to actually understand that. And, sometimes we do need to pull our head out of the sands and really see what our numbers are. Because until you start tracking them, you're not really going to know. What it is, but there's some really good news, and it's really funny, guys. It's just like the reticular activating system, something like that. It's like your RAS, guys. At the end of the day, if all of a sudden, let's say you go and want to go buy a new car and you see this car and you go, oh, that's awesome, want to go and buy it. Next thing you know, you're driving home, you see hundreds of them. I didn't realize this car was so popular. This is the same with the numbers. Once you're aware of them, all of a sudden they start improving. Why? Because you're aware of them. They start increasing because they're always at the top of your mind. So even though they sometimes might be scary to look at, reality is once you know what they are and once you're tracking them, you can actually make some really good decisions and you're aware of them and off you go from there. And this is very important to understand. There is always good news about that. So, how about we get stuck into it, guys? Is everyone good with section one? Does anyone want to add anything to that? Just raise your hands if you're good with section one, guys. Excellent. If anyone wants to add anything, more than happy to share if you want to whack it in the questions for me. Thanks, guys. All right, cool. Let's get on to section two. What are the top 10 numbers that you should be looking at in your business? And first of all, guys, let's actually talk break evens. I believe this is one of the strongest and biggest number that a business owner can actually have a look at. And on our Path to Business Mastery course that clients run, session one is time, session two is understanding your break evens. I believe it's one of the most fundamental things that you actually need to understand in your business. Now, I am going to ask you this question. Who knows exactly to the cent what their break even figures are on a daily, weekly, fortnightly, or bi weekly for the US people on the call, monthly or yearly basis? Can I get you to actually just raise your hands and tell me who exactly knows those figures, right down to the very T, down to the very cent? Excellent. And out of all the people on the call, guys, which there's quite a lot of us here, I've literally only got 3 to 4 hands raised. Now, guys, at the end of the day, I know it's a bit more than that because I'm looking at the clients on the call and I know we've done the break evens recently. Reality is knowing your break evens is fundamental. And why is that? Well, reality is it gives you the ability to create the numbers that you need to drive the rest of the numbers from. If your break even is $10,000 for the month, it can actually then derive your budgets, how much money you can got to spend on expenses. It will show you what your sales targets are. It will show you what your cash flow forecasts are, especially if you're meeting those break evens. It gives you the ability to nut out exactly down to the T your budgets that you can actually monitor. And it's really funny when we look at break evens. Most people think break evens is the amount of expenses that you actually need to get out. Well, you know what, guys? That is one of the 5 parts of break evens. When you're actually creating your break evens, first of all, you need profit and loss expenses. Of course, there are expenses out. How much does it cost me to run my business? That is one of the first points. Absolutely. You need to understand what it is. How much is your telephone? How much is your rent if you're paying rent? How much is, stationery supplies, your accounting fees, you need to add all of this up. Your marketing, even though I don't see marketing as an expense, but, you've got to add it all up. But the other thing that a lot of people forget to actually calculate in their break evens, and this is very important. I don't know if you guys have ever had the experience of, hey, look, I got $10,000 I don't. I've got $10,000 in profit, but I've only got $2,000 in my bank account. Where is that $8,000 gone? And yes, if your debtors are all paid you up and you got no creditors or no debtors, reality is that 8,000 has been taken into these wonderful things over here: your loans, your leases, your taxes. These figures are not in your profit and loss statements, but you need to factor those in into your break evens. And a lot of people don't do this. They just see the profit and loss. Hey, this is cool. Hey, I made 30 grand profit. That's irrelevant. That's only a theory, guys, at the end of the day. You've really got to have a look at what your cash break evens are, and it's purely cash: loans, leases, and taxes. If you've got a car loan that you're paying off, the only thing that goes into the profit and loss is effectively the interest that you're being charged on that. Only interest, not the amount of payments that you're actually paying back. So you've got to have a look at money coming out that's all in the balance sheet. This is very, very important to actually understand. Now, the other thing is, how much money do you want to pay yourself? Now, that could be up in wages in the profit and loss expenses, or you might be taking drawings out. Well, you've got to factor that in. How much money do you want to pay yourself when you're actually doing your break evens? We're all there to make money in business. Let's put it this way. I'll break it down to the key point. Very, very important to understand that you actually put in your break evens how much money you want to make yourself. Now, the next one is, what about future capital investments? And it's really funny to see a lot of companies will invest in new capital. For instance, they want to buy some new fancy wancy computers. They need to go and buy a car. They need to upgrade their fleet. They might need to buy machinery. They might need to deck out their office and refurbish stuff. You've got to factor those into your break evens for the year, because reality is, if you're not doing that, all of a sudden those come up and you have to spend them. You haven't budgeted for them. You haven't included them in your sales targets. Where does the money come from? Well, normally you've got to go and get a loan for it, or something to that effect. So when you're doing your break evens, have a look at what equipment you need to buy over the next 18 months and include it into your break even statements. Very, very important to do. And the last thing, and guys, we're in business for what? To make money. So include a profit percentage in your break evens. Most people don't do that. And then all of a sudden you're going to go, but hang on, if I've got surplus money, it's not a break even then, because break even, that, guys, get that out of your head. Whack in a profit figure to say, right, this is what my break evens are. And when you add that all up, you should be able to easily identify exactly how much sales are required on a daily, weekly, fortnightly, monthly, yearly basis. Your cogs aren't involved in the break even statements from a expenses point of view. Your cost of goods, effectively, if you don't make any sales, you've got no cost of goods. So we just include that later to work out what the sales figures are. So as you can see, this sample business here needs $45,000 a month to have a $15,000 profit, to pay all their marketing, all their financial obligations like loans, leases, and all of that, all their general expenses, including their drawings and all of that. With a 40% cost, they need $45,000 a month or $2,000 a day to actually survive as a business. And guys, this is such a powerful exercise to do, because again, you can then go, if you've got a sales team, you can go tell the sales team what their sales targets actually are. You can put these figures into your budget so you can actually monitor them on a weekly or a fortnightly or a monthly basis. And you've got to have a look at, when you're actually looking at this information, you should be reviewing your budgets on a fortnightly basis. If you need to go and buy more stationery, go and have a look. Go and have a look at. Sorry, I've had a few people say they couldn't hear me. Hopefully, we're all back, guys. Go and have a look at your budgets and say, "Oops, I've already spent $1,000 a month already this month in stationery. I've only budgeted 1,000. Where do I actually take that extra money out of to actually factor it?" So many people don't do that. They don't go and have a look at their budgets on a regular basis to ask the question, "Do I really need this? Have I budgeted for it?" Because if you stick to your budgets and hit your sales targets and you've factored in 15 grand profit, you've factored in your owner's drawings, you've factored in capital investments, do you reckon you're going to make some money? Hell yeah. And that's the thing that we've got to look at with our break evens. And, part of being part of the Black Belt business community, we have all these wonderful tools that will automatically calculate all of this information for you. You key in the figures and you're going to know exactly where you're at. So really good tools. So guys, that's probably the most important. Now, the next number, and this is probably one that a lot of people don't look at or don't really understand, and it's the maximum earning capacity. Now, this is a bit different to your break evens because your break evens are just running on the bare minimums on what you actually need to make. Your maximum earning capacity is effectively how much money can your business actually earn? What is the total maximum that you can actually have based on the number of hours in a day or working hours that you have, the amount of team you've got, the amount of space you have in your retail shop, for instance, the rates that you actually charge, all the different items and products and services that you've got. Now, let me give you a perfect example of what I'm talking about here and why it's so important to understand. If you, let's say you own a medical practice and you have, let's say, 2 rooms in that medical practice, well, you can't go and see a group of patients all at once. So you can only see one patient at a time. Let's say a patient normally takes half an hour to actually be able to in that room. And let's say you only work 8 hours a day. You need an hour for lunch. So reality is you can work out exactly the amount of rooms based on the amount of doctors that you've got in those rooms, based on the rate that you've actually got, based on the rates that you've actually got, how much your maximum earning capacity is. And it's really sad when you actually do this calculation, most people's maximum earning capacity is under 50%. And a majority of clients and people that I work with are normally under 50%. They're at their maximum, is their earning capacity at the moment. They're nowhere near their maximum. And it's really interesting. Once you understand that figure, automatically you go, right, what do I need to change to actually hit my maximum earning capacity? Now, can you actually hit your maximum earning capacity? I'm going to say no, but imagine you could be at 85% rather than 40%. How much difference would that make? Well, there's literally double the amount of sales that you could actually be making if you actually work to getting there. And it was a real wake up call for me, being a service based business, doing this calculation a number of years ago. It really hit home to me. About right. I had a look at my diary, how many clients that I could actually fit in, capable of fitting in, having a look at my admin time, having a look at all of that, working that all out, and going, oh my goodness, I'm at 35% capacity. I am literally. Duping myself of so much more ability, one, to work with clients, and two, the more money that I can actually make, which in turn, of course, gives you more time, which in turn gives you a great lifestyle. So one of the things that you want to do is work out your maximum earning capacity. Now that's going to be different for everyone, depending if you're a service-based business versus if you've got a shop, a retail, a wholesaler. Let's have a look at wholesale. Well, I can sell as many products as I can. I just need to get the order in. Well, that's not true because currently your warehouse can only fit so much worth of products in. Your capital investment with the money that you've got in the bank account can only buy so much stock. Reality is there's only so much that you can do. So you can still work out your maximum earning capacity at this point in time. Once you've actually worked that out, it is now time to make the decisions on what you've got to do. And I know, especially with clients on the phone, on the webinar this morning, on what they've actually done to work all of that out. And once they see those figures, it's like, oh my goodness, we've got to get our butt in the gear. And these are figures that, I'll be honest, I would be sharing with the team. I'd be sharing with the team to go, right, this is what we need to do, because it's going to benefit everyone if you can get near your maximum earning capacity. And it's really, I'll be honest, guys, this exercise is a really good kick in the pants, because one, you know what's really sad, and I've actually seen this about 3 or 4 times, that the maximum earning capacity is less than the break evens. How much is that a kick in the pants? And that's definitely something you don't want to see. So it'd be good to know what it is, so you can work out if it is over the break evens amount, so you can actually go make some money. So, guys, I think that's extremely important to understand. Has anyone got any questions so far? Does anyone want me to answer questions on the maximum earning capacity? More than happy to if someone's a bit confused on that point, but I do think it is important to understand. No, we're all good. All right. If something does come up, I will come back to it. All right, guys, the next one. And I think this is very, very, very critical. Now that you've worked out your break evens, you know how much sales you need to make. You should be giving yourself sales targets or your team sales targets for them to actually achieve. It's really funny. Sorry, there is a question. How often should you review? That's a great point. Every time. Let me go back, guys. That's a great question, by the way, everyone. How often should you review your maximum earning capacity? I'll be honest. Every time you have a change in business, you put an extension on, you change warehouses, you change products, you change your dollarly rate, you put a new team member on. You should always come back to two main things. Go back to your break even spreadsheets or your break evens and work out if you can afford to put that person on. So you change them then and change your maximum earning capacity, and then work out exactly what that new figure is, and then graph it. Find out every month how far behind you have maximum earning capacity. Very, very important. Um, Curious why you can't reach 100%. Let's put it this way, guys, and that's an interesting point. You can probably go over 100%, but it's called burnout. And if you're pushing your team to 100% consistently, they're going to get burnt out. If you're pushing yourself 100%, sooner or later you're going to get burnt out. It's good to always sit around 85%. It's just like engines, guys. If you're running an engine full blast for so long, sooner or later the wear and tear on it's going to really take it out of you. So that's a very, very good question. So guys, great questions there. All right, let's get back to sales targets. Why are these critical? Well, reality is it gives you a guide on what sales you need to make. But the thing is, what most people miss out on when they actually go, yeah, I want to go and make $10,000 this month, this is my sales targets. People forget to break that sales targets down and go, right, I'm going to sell this product, this product, this product, and actually build the sales targets that way. Excuse my phone, guys. And build the sales targets that way. And you need to break the sales targets down so it actually know exactly what products that you are actually going to what you are going to buy straight away. So long and the short of it is a bit of technical things. My phone won't go on silent, but we won't go there, will we? So reality is you break the sales targets down to the products or services that you actually want to sell. And if you've got a good sales rep, for instance, let's say you've got a sales team. If you've got a good sales rep selling that particular product, give him that product to go and sell on your sales targets. If you've got a person that's good on this one, go and get him to sell that type of product or service. And if you personally go, right, I want to get two of those, three of those, and four of those this month, make sure it adds up into your sales targets and go, right, and put the energy and effort into each one of those points to actually go and get. And the best thing that you can do with your sales targets, and most people don't understand this, is put it up. Put it up. Put it up on the wall for people to see. Get a whiteboard, email it out to the team and let them know where things are actually sitting, because reality is they will actually go and get it. And I've got one client, the sales manager, I don't even work with him, I work with the business owners, but the sales manager actually takes a picture every time he actually hits the break even points on the sales targets, and messages to me and going, another month where we've smashed our sales targets, right to the point where the whole team gets to see it, and his actually line has gone above the whiteboard the last couple of months. You know what? Team get excited when they smash their targets. You get excited when you smash your targets. Put it up and share those wins. Know exactly what they are and break it down to the products and services that you actually want to get to. Another client who sells warehousing goods never wanted to share the sales with their teams and what they were doing, locked them out of everything. Finally convinced him after 6 months it's a good thing, put it up on the whiteboard. His sales increased 30% because the team would go, oh, I'm a bit behind at the moment on my weekly sales targets. I better actually sit there and make a few phone calls because I don't want the boss to be disappointed. No one likes disappointing each other. And, as business owners, I feel that we disappoint ourselves way more than what we give credit for ourselves. We always kick ourselves in the butt. Well, you know what? Go and smash those sales targets, guys. Go put them in place and then put the decisions on what you need to sell, how you need to sell them, and go out and do it. It is so possible. And I've got a question here, Nikki. I'm actually going to talk about that question in about 2 more slides. So let me get to that one very, very shortly. So, guys, make sure your entire team can get it. Get it up as a visual representation. Put it up on the wall. Put it on a whiteboard. Email it out. Keep it in a spreadsheet, but constantly look at it in the background. Really actually understand what they are, because as soon as you start doing that, can guarantee they're going to start increasing, guys, because you're going to have more knowledge on, you're going to be asking yourself the question, what do I need to do to hit those sales targets? Most people don't ask that question. So that's sales targets, guys. Let's have a look at the next one. Cost of acquisition. I believe this is extremely important to understand on how much does it cost to actually bring in a new customer. What is it going to do? And, I've got a picture of a shopping trolley. Imagine you could take a shopping trolley, walk it into somewhere, hand over a whole heap of money, and they give you 10 times of that money back. Would that be a good deal? Hell yeah. How many shopping trolleys of money would you go and take? And this is the thing that you've got to actually have a look at. How much does it cost for you to put on a new customer? And let's say you work out that it's $50 to put on a new customer. Well, if you know you need 10 new customers, you know you've got to invest $500 in the business to get those new customers. Now, the biggest trick with this one is you need to understand your lifetime value of a customer. How long does a customer stay and spend money with you? If you work out that your lifetime value is $1,000 per customer, would you be happy to go and spend $50 to go and get $1,000? Well, most people will go, yay. Most people skimp on their marketing budgets because they just don't want to spend because it doesn't work. Well, again, marketing, guess what, is a numbers game. So you've really got to understand your cost of acquisition for a customer. And you know what's funny? The more you understand it, the less the cost of acquisition actually is. Why? One, you're aware of it. Two, you get better at actually doing marketing and getting those costs of acquisitions. And three, it's a good tool to actually know and to actually review to bring it down. So having a look at your cost of acquisitions and lifetime value is very, very important in the business. If you've done Google AdWords before, Google AdWords has great reports to show you cost per click. It shows you your conversion rates per click, how much it's actually costing you. It's to be sitting there going, right, 1 click for every $10 of spend. Then you can actually work out of those 1 clicks, how many of them actually bought. And then you can work out how much it's going to cost you for a good marketing budget. And very, very, very important to actually see what the cost of acquisition is and the lifetime value of your customers. Because, again, you've got to throw money at your business to go and make money. You've heard that saying before. Now, is there marketing out there that you don't have to throw money at? Absolutely. But reality is it the best for your business? And this is what you've really, really, really got to look at. Social media is huge, and a lot of people have built social media. On my closed webinars for clients on Monday mornings that I do, we spoke this Monday about social media. Yes, it's free to go and put posts up, but that's costing you a lot of time to do that. Plus, it takes a while to build that momentum on social media. So, there is still a cost of acquisition there, your time. How much is your time costing to actually put on those customers? And it's very, very important to actually understand that point in the business. I know clients who have great businesses who don't spend any money on marketing, but it's taken them 10 years to actually get to that point. So you've really got to have a look, and their cost of acquisition has been a lot of time, a lot of energy, and a lot of effort in their business. So it's time to actually have a look at what your cost of acquisitions actually are. All right, so point 3 and 4, sales targets and cost of acquisitions. Does anyone have any questions on those points? I told you today was going to be very interactive. Any questions on those business numbers? If you don't mind, I'll give you 20 seconds to write. I know, time master. Look at the time already. Still got 6 more. All good? Excellent. All right. Now, point number 5, guys, productivity percentage. If you wanted to give yourself a really good kick up the butt in business, go and work out what your productivity percentage is for you and or your team. You will be absolutely gobsmacked on what this actually is. And effectively, what does that mean? Productivity percentage. How much of your billable hours a week are actually billable? For all the work that you do, how much is billable? For your team, how much is billable? You've really, really got to have a look at, and Nikki asked this question: what should be the percentage of admin versus actual billable time for her team? Well, you know what, guys? I honestly believe it should be a range of things. I've got people on the call now who actually call it admin percentage and only allow their team a certain amount of admin percentage. And I think that's 10%, maybe 5%. But I honestly believe 10% is probably good. That means that out of a 40-hour week, 4 hours should be non-billable. For the people who are actually out there billing. Of course, BDMs and all of that, it's a bit harder, but you want to actually calculate the productivity percentage on the return that they're actually getting, how many leads they're getting, and all of that. So everyone has a productivity percentage, and have a think about yourself on how much your productivity percentage in your business is. If you're doing a 40-hour week, how much of that week is productive? And you'd be absolutely scared on what it actually is. And working with a client recently with a team of about 12 or 13 people, we worked out the productivity percentage for the week was 40%. They were working at 40% productivity, and they were screaming out saying they wanted more employees. We need more help. We need more help. We need more. How scary is that? They're running at 40% billable hours, and they were screaming out for more help. And, most business owners don't actually sit there and go, oh, okay, they're screaming out for more help. What they'll do is they go, oh, we better get more help, instead of going, well, hang on a second. What are their productivity percentage? And once we showed the team that they were actually at 40%, they've gone, oh, yeah, okay. And the good news is it has picked up from there. It is so much better. There's still a way to go, but it is way better. Now, Nikki asked the question, what should be admin versus billable? I'll be honest, I think 85% productivity is a good wicket. If you can get that, that's great. A lot of service companies based on 7-Eleven. So out of 11 hours that you actually do, 7 of them should be billed for a service company. Now, you can get them higher than that, but I know that's the averages out there. So, you know what, guys? Go and work out what your own productivity percentage is, just for a good little kick up the butt to go, hang on a second, I've only been 50% productive this week. How much more could I actually do in my business if I was actually more productive? And then this boils back down to your time management, your team's time management, what they're doing. But once you work that figure out, it's about putting those strategies in place to really make you more productive. And you know what, guys, as a business number, I think that's well up there for everyone to actually be aware of. Very, very important. So, next one. I look at products and service margins, knowing exactly how much a product or your service margins are, so you know what products are actually working for you or not. So many people out there and flog products that pretty much only make them break even because they want to keep the customer happy. Well, that's good, guys, and I like keeping customer happy, but they should only be add-ons, not the primary product that you actually sell. So, I look at the IT industry, there's not much margin on hardware. So service is going to be your most lucrative margin. The hardware is just an add-on on the side. You just wouldn't want to actually go and sell hardware unless you're in a mass amounts of selling of hardware. So understand what your products and service margins are, and as a service company, have a look how much per hour per employee. Have a look at the amount of materials that they actually need, and then work out if that's making you some good margins or not. Because if they're not, go and get rid of that product. And it's so I look at two ways of this, and I had this conversation a couple of months ago with one of the clients. We looked at, right, we've got 20 ranges of products that they actually sell. And we've gone, right, which are the ones that actually make you money and which ones don't make us money? We've worked out that 8 of those products do not make any money. It's actually sending the company backwards, 8 of them. And even though they'd actually sold quite well, it wasn't making the company any money. So there's two things that you can do there. One, increase the price, or two, get rid of them. And look what Apple did. Apple's a perfect example. They tried to keep up with Windows years and years and years ago. We're talking early 90s, by having all these customized computers and all of that. And, they couldn't do it. So what happened? They went, right, we're going to give you this and we're going to give you this, and that's it. And you can change a couple of the componentry, but that's all we're going to give you. And look what happened to the company. By reducing their products or services, they increase their sales, they increase what they were at. So these are the questions that you've actually got to look at about it. Most people will look at it and go, oh my goodness, I'm not making that much money, I better go and add on 10 more products. Well, no, sometimes downsizing your products or services is going to make a difference in your business. And I'm going to be honest, I did that recently in my business. I only offer 4 products now, where before I was offering 8 or 9. And it's made it so much easier to manage my products that I run in my business by actually downsizing those products. And it does make life easier. So understanding those products and service margins are critical for you to make decisions whether that product should stay or that service should stay, or should you be selling more of those services, which then link back down to the break evens, maximum earning capacities, and your productivity percentages. Because if you find a product is not making you money because the labor hours are way too high, then you go back down to your product percentages and productivity percentages and go, well, hang on a second, how do we make it better? Or vice versa, scrap the product. And, I think you can see where I'm going from here. So reality is, having a look at those are extremely, extremely important. Then you can review what you can upsell and cross sell, and go from there. So, guys, very important to actually track those points. Guys, keep the questions for a minute. I'm going to keep flying through this. Not flying through it. I want you guys to get the understanding of it. Guys, return on investment. I think it's very, very important to understand every dollar that you spend, asking yourself this question: what is the return that I'm actually going to get? And you're going to sit there and go, but I'm going to go buy insurance. Well, yeah, I know the return I'm going to get. If my building burns down, touch wood, it doesn't happen, everyone, I'm going to get the money back. But ask yourself this: how much money are you going to get back? Is that going to be enough to actually rebuild your business? Will it get you to survive? Will it actually look at the loss of customers that you're going to get? This is return on investment. You don't want to go for your cheapest insurance if you find out that it's not going to repay your building, that it will put you out of business because your customers go somewhere else. So you've got to make sure that your return on investment. Same with your marketing dollars. If you're spending $100 on marketing, what is your return on investment? How are you actually tracking that? And every dollar spend, you should be looking at, what is your return? Are you getting a return? And if you're not, why not? So review exactly your return on investment. How much marketing? What's your conversion rates? How are those conversion rates looking on those marketing dollars? All of that type of stuff. This is extremely, extremely important to understand in business, your return on your investment. And ask yourself this: every dollar that you're spending, what return am I actually going to be getting from that? Most people just spend money willy nilly because they say they needed it. And one particular client was going and buying stationery all the time because the admin person did it. And they did a clean out of their office and found literally over 500 pens that they continually keep buying. It's just incredible the amount of money people spend without actually asking themselves this question: what is the return on investment of this money that you're actually spending? Of course, there's things out there that you need to buy, but I'm going to put it to you this way. And if you're a team member on here, I'm going to apologize right now, guys, and I will apologize now because I'm going to offend you. But every time you pay wages, ask yourself this question: what return on investment am I getting from each one of those individual people? Am I getting a return on those people? And if not, are you going to sit them down and have that hard call? Are you going to sit them down and go, right, I'm not getting a return on my investment at the moment, investing in you. What needs to happen to change? And I know that's a hard call, guys, and most people don't want to do it, but you've got to ask yourself that question: what is my return on investment on all the money that I'm spending? A lot of people don't do that, and I think it's critical in business, and knowing your return on investment is one of the critical business numbers you need to make. Extremely, extremely important. All right. Guys, the next one, and I think this is important for everybody, is retention rates. How often are you attracting your customers back? What are your retention rates? And this boils back down to lifetime value, and it goes back to that. How do you actually review your retention rates? What are they, and what is it? And I'm working with a couple of clients at the moment on retention rates, on the strategies we need to put in place. Whoa, can everyone still hear me? Whoa, 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 what happened? Okay, can't hear you. Alright, guys, can you just raise your hands if you can hear me okay, or if it's... I can hear a lot of static. So I'm going to put my hands down. Woo! Alright, we back? We back to normal? Technology, static in line, that's better. Static is gone. Now you can. Woohoo! There we go. Guys, retention rate is so important. And as I mentioned, I've got a lot of clients that I'm working on retention rates at the moment to actually ask the customer to come back, to book appointments in, or book the next 2 or 3 appointments in if they're in a service industry before they actually before they leave for their next session. You've got to really understand your retention rates, because it boils down to that old saying that it's a lot easier to keep an existing customer than a lot less cheaper to keep an existing customer than buying new ones. So understand your retention rates, guys. Find out. And I'm looking at the people on the line, and everyone should have the ability to have a retention rate calculation there, no matter which way. How often do you actually buy? And it's really, really funny. I work with a decking company, and once you buy a deck, you'd expect it to last 10 to 15 years, correct? Well, we want that customer back. So we do maintenance checks. We come out for the next 5 years and do maintenance checks. So you just pop in, hey, just checking the deck, make sure everything's looking good. Yep. Oh, look, hey, would you like to extend down there? That adds retention rate. You can do so much in your business to actually ask the customer back. It's not funny. Very, very important to really get those retention rates there. Next point, benchmarking. Okay, what is your competition doing? Not just your competition, but what are people out there doing? Understanding what your profit and loss looks like in your figures versus what other people's are looking at. Now, I always want you guys to stand out from the crowd. Don't get me wrong. I really want you to do that. But it's also good to know that you're actually working on the averages, because averages don't lie. And, we're not talking statistics here where 85% of statistics are made up. I just made up that 85%, by the way. We're not talking about that, but we're talking about seeing where you're actually at. And there is a great website here in Australia that I know that's really good, or your accountant should be able to provide you these figures on what your industry is at. And if you go to the ATO website and search for benchmarks, there are a majority of industries on there, and it will show you what the sales turnovers normally are, how much your labor costs are, how much you pay in rent, how much your cost of goods are, and you can really look at your percentages in business. And Irene asked the question before, what will be some good percentages to look at on the profit and loss? Those benchmarks are the key point. Go and have a look at what the ATO provide based on people's tax returns, so you can get a good indication of what it should be. And I'm pretty sure there's publishing in there. Irene and Steve run a publishing business. So have a look at your benchmarks, review them. You don't have to review them I'd review them every year, or speak to your accountant or bookkeeper about what those benchmarks are and ask them to actually provide you what the benchmarks are, so you can actually see where you're at. Very, very, very important. How can you measure this? Irene, you've asked how can you measure this? I need a bit more information. Measure what? All you do is have a look at the report, have a look at your profit and loss, work out the percentages, and then compare the two, if that's what you actually mean. It is quite easy to actually look at the benchmarks and see where you're actually situated. All right, last one. Job margins, cost of manufacture. And this goes back down to products and service margins, but this is a tiny bit different, guys. It doesn't matter whether you are running jobs in construction, surgeries, projects, running seminars and workshops. You need to track your numbers. You need to keep on top of them. You know what? And this is, and I'm sorry for the accountants on the line if I do offend again, and you guys probably don't do this, but a lot of accountants wait till the end of the year. They do your tax return and go, oh, by the way, your cogs are down. You probably should change that. You're a year down the track. What the? Why couldn't that be told 6 months ago, 12 months ago. You've got the ability to change it if it's wrong. But do you know how many people get to the end of a job and they go, oh, we didn't make any money on that. Oh, bugger. Better do good next time. Oh my goodness, guys. Sorry, I'm getting a bit passionate now. Have a look throughout the job. If you're sitting there and you're going, right, I've done 70% of my labor already, and you've only done 50% of the job, go warning bells, give your team or give whoever a good kick up the bloody ass and go, right, guys, you've got 30% of time left to complete 50% of this job. What are you going to do to actually get it fixed? What is it? Your cost of manufacture. Have a look. If your supplies have gone up, you need to check your cost of manufacture. You need to find out if your manufacturing is going overtime if you're a manufacturer. Really have a look at exactly what's happening, because let's put it this way, for every percent of labor over, every 1 minute over, you are losing money on that job, especially if it's a quoted job and you can't add variances to it. Guys, have a look at it. But this is for service industries as well. So many people go overtime. They put way too much energy and effort into stuff, and it's great to make customers happy. Got no problems with that. But at the end of the day, most of the reasons we don't have enough time is because we're over servicing our customers. We are over servicing, which actually, we are only charging 2-star rates on 5-star service. And if a hotel did that, how quickly do you reckon they'd go out of business? Pretty quickly. This is the thing you've got to have a look at. Look at your job margins on a regular basis. And I've watched time and time and time again businesses go out of business because they never track the most important thing they should be. Am I making money on jobs? Very important. Sorry, guys, I'm a bit pumped up on that point, but I just see it as such a massive mistake out there in business. So, guys, have you got any questions whatsoever on those 10 things, if you don't mind? We're going to finish up with the last couple of points on implementing. Has anyone got any questions there? More than happy to help answer. Slide 8, retention rates, but I've answered you later. Excellent. Glad with that. Cool. All right, on those last 4 points there, all good. Excellent. All right, guys, let's move on to the next. Oh, by the way, I've picked up 10 that I believe every business can actually use. I've got a website, the 75 most key KPIs that you need to run in your business. I'll share that website with you. I'll email everyone out. This is just some of them. We talked about retention rate. We talked about lifetime value, but customer turnover rate's important. You look at your marketing efforts, cost per lead, conversion rate, search engine rankings, page views. If you're all online, social networking footprint, blah, 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 blah. There is so many KPIs that you could be doing. And, there's vacancy rates that you could be doing in your business. There are so many more. But what you've got to do is not overwhelm yourself with them. Choose the 3 or 4 at the moment that are going to make the massive business in your massive difference in your business. All right, implementation. Guys, at the end of the day, use a spreadsheet to go and track your numbers to find out where you're at. If you're behind, so many people put a sales targets in place and budgets. They don't hit the budgets 1 month. Do they actually go and change the budgets for next month to say we need to have that extra amount of sales? Most people don't. They go, oh, I'll make it better next month. No, go and add it onto next quarter, or change the budget and break the $10,000 loss on last month and go and break that over the next 6 months worth of figures in your budget. So you change the sales targets. You let the team know they've changed. You can do tools like this. Spreadsheets is a great way of tracking it. You don't want to make it hard. And you can see down here, this is broken down from conversion rates to team, vacancy spots on this business. Very important. I did go and change all the figures in here, guys. This is an actual business, but I have changed the amount. So spreadsheets can track it. Whiteboards are great. Go and whack up a whole heap of whiteboards on the area. Write your projects up and where they're actually sitting. It makes a difference of visual representation. Very good. There's software out there that can actually run it, and this was a great picture that I found about software running sales. But if you clicked on invoicing, if you clicked on stock, CRM, it will give you a whole heap of analytical tools on what to actually have a look at. Down the bottom here, there's a KPI dashboard. Now, I've never seen this software. I'm just using it as an example. There's heaps of software out there that will actually track all of these figures for you. Now, here is going to be the $50 million one. Check up with your accountant or bookkeeper. I am sure they'll be more than happy to track these figures for you. I know I've got a couple of bookkeepers on the call at the moment. Guys, can you just raise your hands if you would be happy to do this for your clients' businesses? And look, hands are almost immediately straight up. Ask your accountant. Oh, sorry, there's some accountants on the call. You can raise your hands if you're happy to help put these figures in place. Would that be correct, guys? Come on, where's the hands for the accountants there? Absolutely. This is the thing that you've actually got to look at. Go and ask them for it. You know what? It may cost you an extra 70, 80, 90, 100, 200, $500 a month. I don't know what the figures it would be to track this information, but you know what? How much is that worth for you? How much could you make some business changes and actually go and increase your cash by X amount of dollars by investing that 70, 80, 90, $100 or whatever it might be for your bookkeeper or accountant to actually run these figures on at least minimum monthly basis. And this is the thing, guys, we look at our business numbers. Sports is a perfect example. They analyze the matches. Tennis, how many forehand winners were done? How many backhand winners were done? How many, first serves in? They analyze, they look at the numbers. These are all numbers. Sports do it, rugby league, everything. They do it. They analyze. And then after the game, they analyze. How much do you analyze after your business game? Very, very rare would be the normal answer that I get. I'm going to say normal, guys. You've got to analyze these numbers and look at them and go, right, what am I going to do with it? Not wait till the end of the year for your accountant to sit you down and go, oh, by the way, it wasn't a good year for you. And you look at them and go, well, no. Well, I won't continue that sentence. Use that analytical work, look at it, review it. And if you don't know, again, speak with the people that do know. And I'm going to leave you with a very, very good example, guys. I know I'm a couple of minutes over 10:30. I do apologize. Got a bit excited in the middle there. But here is a real life example of the decisions make. And for months upon months, here is a lead source report and how many quotes were written out of each of these lead sources. What was the cost of leads, and then the number one. So the average cost for a lead was $1.69. So it was costing them to get one lead $1.69. They got 507 leads that month. Now, there's one thing that stood out for me. I looked at the report like I do with clients, and I went, ooh, quoted 184 for this transfer company. The lead was free, but you only won two. Now, imagine, and this was true for this company, 10% of leads. It took 10 minutes to write a quote. Now, you think about the time wasted in the business for 184 leads. Now, at 10 minutes, that is literally almost 1 week full time for a person to write those quotes to go and win two leads only. That was it, two. And you can actually see here repeat business is the highest margin on these. Referrals were quite high. Your websites were the usual, 22. That's a pretty good average we worked out. But 184 to 2. Now I'm going to let you question this, guys. What do you think we done? What did we do for that business right there? And please put in the answers on what we actually did to save the person time straight away. What did we actually do? If you can just whack in the questions, I'd love to see your answers, guys. What would you do in that situation? That might be a better question. Stop quoting. Good. There's one answer. Pay for Google ads, so change the marketing, so stop doing them. Yeah. And this is helping you with decisions, guys, by the way. I want you to understand what decisions you make looking at a report like this. You've got the numbers, that's great, but what do you do? Automate quotes? Absolutely. That's a great answer. New system in place to follow up on quotes. Excellent. Look after current clients. Okay. Guys, great answers. What we did is we asked why. We rang Transsurf up and said, why are we losing all of these quotes? And they're going, oh, because you're $5 more expensive than the rest of the companies that are quoting as well. $5 more. So we reduced the price by $6. Guess what happened to Transsurf's number one quotes one? Oh my goodness. Now, they're in a cost sensitive business. These are very, very, very cost sensitive. They're a business that's very cost sensitive. So reality is reducing it by $6, the number of quotes went up right to the point they were turning away work at that stage. And guys, this is about the decisions you need to make. Have a look at your reports and go, hang on a second, there's something wrong there. It took me about 5 seconds to pick that up, and then gone, right, how do we actually change that? So it's really important that when you have these figures, it's very important to do that, and that's a great point. Ensure they are quoting for customers they want, not tire kickers. Guys, we changed the business around and literally generated $50,000 worth of work in a span of a couple of months. It was incredible on what we actually did with that business just by reviewing the numbers and how important that is. So, guys, at the end of the day, what you need to do is make sure you're reviewing your numbers. A lot of us don't do it, and don't do it well enough. And if you do look at the numbers, they normally put to the side. And clients know on the phone here, every time I walk in, I actually ask them every week on their accountability sheet, have you reviewed your KPIs this month and what are they actually looking like? Have they gone up? Have they gone down? What do we need to do to change them? I'm checking them up all the time. Business is a numbers game. I think we've just learnt that. Every time I walk in, I ask clients, right, how was budgets? How are sales targets looking? Are we looking on budget? These are pretty typical questions I'm asking on a session basis, no matter what. So, guys, that is business numbers in an hour. There is a lot more to it, guys. I'm just going to share with you. If you want to get those spreadsheets, if you want to get some more information, if you want to look at working with someone like myself who's not a fluffy business coach, please don't put me in that category. I hate that word. It's going to cost you $1 for the next 4 weeks. That's it. You can sign up to the programs. You'll have access to all those KPI reports. You'll have access to understanding your numbers better. You'll have access to accountability sheets. You can ask me any questions about your business. I'm sure clients here will tell you. I got an email back from a new client who did session 1, which was their time management, and it has already gone, wow, I've just been able to increase my maximum earning capacity by 4 new clients because I hadn't been managing my time correctly. You've shown me how to manage time. That cost her $1. $1 for the first month. Now thereafter, every month after that's $2.97 a month. But I can tell you now, it's one of the best investments that you can do in your business. Because again, business is a numbers game. And guys, when you got someone behind you, motivating you, backing you, answering the questions, and putting you in contact with the right people for $1 for the first month, well worth it. And guys, I'm not going to chase you up. I'm not going to try and sell you after that. Just sign up to the dollar program. It's going to cost you $1, and if after 4 weeks you don't like it, cancel it. I've got no problems, guys. I'm here to help people who really want to grow their business and move forward. So, guys, that's it for me. Before we go, we'd like to do the last thing. What was the number one thing you got out of today and you're going to implement? The number one thing that you got out of today and going to implement. Can you write it in the questions for me, please? I want to hear from you guys. The number one thing. And in the meantime, I'm actually going to give you the website for the $1. It will be in your chat section. Let's hear it, guys. Number one thing. All right. If you just go black belt, way too many words. blackbeltyourbusiness.com. Send to all. All right, guys, on the front page, there's a February kick butt special. Just click on that. Go put your details. If you're from the US, I've got 2 options, US dollars and Australian dollars. So you won't be ripped off with a poor Australian dollar at the moment. All right, number one thing, guys, in the questions. This is great. What are we looking at? All right. No, you're on that program, Irene, so you don't need to worry about changing. You guys are smashing it there. So, no, don't go sign up to the dollar because you're already on the program. Expand your current scorecards. Absolutely. Retention rates, so important. Cost of acquisition, I mean, very important. Recheck your break evens. Absolutely. Definitely recheck them. Make sure you got all those 5 things in there. Work out your bottom line for weekly business. Absolutely. Extra cost in break evens. Absolutely. Definitely. Yep. Review your budget. Definitely. Yep. break it down, cost per leads, get more information, guys. So, guys, I want to thank you very much for another awesome webinar. I'm looking forward to getting some of you guys on the program. I'm sure you'll be not worried about. And our next webinar is already up on the website. We're going to talk about getting discipline in your business, or discipline in yourself. You know why? Because at the end of the day, it's great learning all of this stuff, but most people won't implement what I'm talking about. You need discipline to do that. And I'm going to show you how easy discipline is to get back for yourself, because a lot of people don't have that discipline. So I'm going to share that with you. Guys, thank you for your time. Hope you have a wonderful Wednesday, or if you're over in the US, Tuesday evening. Really looking forward to catching up with you shortly, and have a great day, guys. Have fun.